And the reason I ask is so that I know I want to make this session obviously as productive as possible. Okay, good. If you have any questions, just throw them in the chat. Be happy to try and answer them. Today's session is going to have to be a little bit shorter than normal. We've got a conflict at the bottom of the hour. But I thought what we would do is because we have gone into, lesson mode so much the last 2 or 3 sessions. Okay, because we've gone into lesson mode, I want to spend today really applying everything we've learned in the live markets with live trading and analysis. Does that make sense? So if you have markets you want to take a look at, let me know. Otherwise, I'll just go through a list of markets and try to put this whole global major market puzzle together for you. And you'll see how we do it applying one simple rule-based strategy. Now, when I say simple, what I mean is I would argue that the rules for the strategy are very simple. Actually doing it is where the challenge is for people. Does that make sense? Of course, if you are new to the session or new to the information, this is a strategy I developed many years ago. And on the trading floor of the Chicago Mercantile Exchange, where we quantify the market's real supply and demand and identify price levels where supply and demand is out of balance, right? Where you have significant unfilled buy and sell orders, real demand, real supply. And then, and also identifying charts and markets where you have big pockets of filled orders. And as we know, unfilled orders cause prices to turn. Filled orders facilitate price movement. Having said all that, let's get going. I see in the chat here, sure, we can, so you're asking, do you take RBR and DBD setups on 4-hour and 1-hour charts? Yes, but we take more than that. So that's one set, that's one picture of a supply-demand imbalance. But the mistake that many people make is they'll take kind of the picture that you described right there in your question. They'll take that picture, that pattern, and think it's an opportunity. Not every one of those is an opportunity. We have to run it through our filter, right? Okay, where is it on the larger time frame supply-demand picture? Is it in the middle, or is it at the supply-demand extremes? Okay. Now we could take a look at that here. Why don't we start out by just looking at the S&P? So this is a level we had in yesterday for our for the group that I do a live trading session every morning for the group here. Yeah, context is key. Exactly, Michael. Here's a level we had, the 2984, and got down to about 2980. This is the S&P. This is yesterday. So, if we, just so you're not confused, let me get rid of that white circle. And let me go here. Okay, so there's our demand zone, right? We've had this. Now, if you look at this picture right here, okay, and let's make this a different color. All right, now let's look at a 5-minute chart or 10-minute chart or whatever you want to look at next to that. Now, what does the yellow box represent? Filled orders or unfilled orders? What would you say to that? Filled orders or unfilled orders in the yellow box? Right, demand, right? Significant unfilled orders. We have the pattern, we have our, odds and everything's in place, okay? What about the white box? Does the price action, does the picture there, the price action represent filled orders or unfilled orders? Filled orders, yes. So unfilled orders cause prices to turn like they did, and filled orders facilitate price movement. Now, look over here on the 5-minute chart. Do we see any demand zones in here? This area that I'm kind of circling, this whole area here. See any demand zones? If you do, maybe call out a number. So yeah, so down here maybe, that one. Where else? Now put maybe some lines in. Yep, 30 or 307. So maybe up here. Yep, 15. Sure. So we've got like three here, right? This one, maybe that one, that one. Well, what we have to understand is look at the price points of all these. And they're the price points you're putting in the chat. Where are they in relation to this picture over on the right? Are they in the yellow box area or the white box area? Filled orders or unfilled orders? Right. So even though the picture of demand may look really good over here, I wouldn't take those. Does that make sense? That's why one of the top questions that I get in my, travels around the world, interactions with so many people, one of the top questions I get is, why do some levels work and others don't? Make sense? Okay. People just take that picture and say, okay, I'm going to buy there. You have to know context. Now, again, I know this is not stuff that we normally talk about, but just wanted to, give you a little, get you closer to, the answer and give you an idea why that is. Okay? All right. Let's keep going. So if you have a markets you want to look at, let me know. Otherwise, I can go through my list. Now, in my trading session this morning with the members, here's something we went over that I'll share with you here. We said, today's probably not a day where, or at least in the early going, we're going to have opportunities to enter positions in the Forex markets. Low risk, high reward, and high probability opportunities. Now, why would I say that? Look at the daily chart of the dollar. The dollar is such a key market in this big mix of currencies, right? It's right in the middle. Look at the range for the past couple weeks. I'll just put a box around it. You have to kind of include that high, but even if you don't include that high, you kind of have to. Let me change the color. See this range? Can there be a significant supply and demand imbalance for US dollars inside this range, or especially close to the middle of the range where price is now? No, there can't be. If there was, the picture would look very different. You'd see very little trading and price would shoot away from that area, right? Okay. Now, out at the extremes, sure, we'll find some levels in there, but it's like right in the middle. So when we go to other FX markets that are very related to the dollar, the US dollar, we need to be very careful. But we can look at the Euro, New Zealand. 96. Oh, you're talking about this area? Yeah, down in here, we're likely to find some demand. Yeah, you're saying right down in here, this area? And we'll take it all the way to the bottom. So we would go down in here. I think that's the one you're asking about, correct? Yeah, the only reason why I didn't put this in is because you're going to hit this again first. So this is a level we've had for a while, and anyway, there you go. Okay. So yeah, we can look at that market you wanted to take a look at. Just a second here. Want to look at the euro against the New Zealand dollar? Sure. I think you were saying possibly the weekly chart. So yeah, I don't see a whole lot going on here on the weekly. Let's go down a time frame. And now other things start to show up. So we look at current price, we go left and up, and we get to an area right here that's interesting. It's just one candle though, so we want to go down to smaller time frames and take a look. So let's do that. Let's go down to the 4-hour chart. Scrunch this up a little bit. There we go. So now an area of interest would be, yeah, up in here, this 177.55. That's 177.55, this area. And then if you, of course, you can get your stop above that, that would be great. Okay. Is that the level you were speaking of? And if not, it does look like a real good one. Yeah, Aiden, exactly. Yeah, you never really want to call one candle a supply or demand zone because then everything becomes a supply demand zone, and that's just not the case. Now, obviously, there's supply and demand everywhere in the markets, right? That's otherwise prices wouldn't move. However, what we care about is identifying the picture that represents a significant supply and demand imbalance. Okay? All right. Let's keep going. So why don't we take a look at the yen? This is the dollar yen. So we track this market a lot in the morning sessions, and there's a daily chart just for some context. Okay, just so you can see where we're at, and now we'll work our way down on the smaller time frames. Let's go to the 4-hour chart. And when we do, I'm sorry, the 180-minute chart. When we do, you're going to see there is a demand zone below current price. It's not that close. 107.38. That's 107.38, where we'd expect prices. And there's a couple levels on top of each other there, actually. So we'd expect prices to bounce here. And then there is another little short-term trading level. Two of them actually seen on the 5-minute chart here. Now keep in mind the difference between the white circle and the yellow box, because we have this is kind of a guide. These are charts off of our morning session. The white circle means it was a fresh level and it's now a tested level. So it's not fresh anymore, right? The fact that it's not fresh means it's a lower probability level. There's less supply there. Price has been there already, which means, you know, some of those sell orders that make up the supply are filled. Does that make sense? However, sitting above that in the 108.22 area up to 108.28, we have a fresh supply zone. So you can try this level again if you wanted to and it met your, you know, your trading plan criteria, or you can wait for the upper level. Okay. Oh, good question, Andre. So Andre is saying, I think what you're saying basically is there's so much news in spot Forex. You know, would you take a level from that far back or this or that? I would. If you're asking what I would do, that's my answer. You'll see that, and some of you that have been here for a while have probably seen this over the years. News typically just speeds up what was going to happen anyway. Okay. Ultimately, price almost always just moves from fresh supply to fresh demand and back again, you know, until those orders are gone. Then it moves to the next set of levels, right? The new, you know, if not always, but most of the time, you know, people get hurt by the news. It's not because of the news. It's because they're buying and selling in the wrong area. Okay, so what you'll find is, again, and if you really understand how this works, and we could go over this quite a bit deeper next time. We'll have a session just focused on news and price. We have tons of examples right from our FX Street sessions where, you know, the stronger the news is, the more that pushes price out to our key levels, right? And think about how markets really work. We can look at another market while we do that. Why don't we look at the, maybe not the Aussie dollar. We had some great levels here in the New Zealand dollar. You know, this one off the daily is still working, but there is room. I'll show you. Not there. Okay. Well, let's go here. So let's say we have a supply zone sitting, which we do, sitting right up here. How is price going to get up to that level for a shorting opportunity? Well, a lot of people need to buy. In fact, enough people need to buy to get price to come up to this level, right? You need a lot of buying or demand, right? Good news. So how's that buying going to happen? You need an invitation to go out to the buyers. That invitation is almost always in the form of good news. So now good news comes out, and you have other levels here. You have a little supply zone here, maybe a little one here, right? You have all these little levels here, but maybe that's the one with where you have the significant supply. We have lots of sell orders. So what happens is if it's any old news, let's say it's good news, but it's not like great news. Maybe that brings price up to here. Maybe another time you have stronger news, but it's still not like super strong news, and that brings price up to here. And when I say, the news is getting stronger, I mean more people are interested in buying, right? But then all of a sudden, a significant, like a really big good news event comes out, which invites lots of people to buy. So there's tons of demand coming into the market. Well, you'll probably fill all the sell orders here at that level. Okay, blow this up. All these sell orders will probably get filled, but because the news was so good, you still have more demand looking for sell orders to get filled. So the price will probably quickly come up to this, and now, you're able to fill more of those buy orders coming in from the good news. Okay, now all those sell orders are gone. Now price, there's still some buy orders left over. Now price comes up to here for the first time, this level. And now the remaining buy orders from that good news are able to get filled. And now that last buyer or buy order is filled at this level. What's the next move in price? Where's price going to go from there? It's going to go down. Down to where? Yeah, because now you have a lot of supply left over and no buyers. Your buyers went to zero. But now price is going to turn lower. Where's it going to turn? Where's it going to move to? Oh, these little pop-ups here. Right. What's going to stop price from falling? Demand, right? Hasn't everybody that was going to buy off the news, haven't they just bought? You see my point? That's why so often you hear you hear good news. And let me tell you, I'm not suggesting the news is fake or anything like that. The news, let's assume, most of the news is probably real. I mean, an economic report is an economic report, right? It's not that the news is not real, okay? And that's why that news price relationship is so misunderstood by your average trader or investor. Okay? And that's why the professional consistently buys at demand or wholesale prices and sells at supply or retail prices. And the typical retail trader or investor almost takes the opposite action. Does that make sense? Okay. Yeah, Andrew, you could send me an email. I'll do my best. Yeah, so financial institutions, and look, that's how I started my career on the financial institution, side of the business. I was on the professional side of the business. I started my career facilitating order flow for, big banks and financial institutions and so on. Um, and I don't, I mean, I'm sure it happens once in a while, but I don't ever remember seeing some news come out and all of a sudden a financial institution decides, oh, instead of being a buyer, we want a seller. Like that's not really how it works, right? What the professional knows that the average trader investor doesn't is that how you make money buying and selling anything in life is exactly how you make money buying and selling in the markets. That's what people, forget or don't pay attention to. Okay. All right, let's keep going. So let's take a look at the bond market. And again, coming into today, there's no like new fresh levels close to current price. Actually, before we go to the bond market, there is one market we were going to take a look at. Yeah, that's not even a. Yeah, most of these levels are just moving off of the levels that we've had already. Let's take a look. Yeah, so again, the S&P did come up to this supply up here, but it's not the first time it's there. It's not fresh. So it's no surprise that it's, moving higher through it. Same thing with the NASDAQ. Let's take a look. And we can take a look at this chart right here. So this is all yesterday. If you can take a look at the NASDAQ, it's a good chart to look at. There we go. So price hit our supply zone and fell. There was a little demand down here in a different time frame, but now we're back up into that level that's not fresh anymore. And now we're hitting another level that was tested already. Okay. So this should cause prices to slow, equity index prices to slow down, but don't be surprised if this level doesn't hold up. It's not a, the equity index markets are designed to go up over time. So we're very careful shorting the equity index markets, especially at tested or, overnight supply zones, right? Yeah, we can take a look at the metals, gold and stuff like that. Problem. But gold's another market. All you have to do is look at the daily chart right here in the upper right corner. See that? You look at current price and it's like, okay, it's right in the middle of the past week and a half. So there's not much to look at. The one level we are watching in gold, so we're looking at the gold futures. You'll see it's right down here, 1484. I know it so well, you don't even have to look for it anymore. There it is. So we almost got down there yesterday. We're looking at the gold futures. And that level at 1484 down to 1473. We really have two demand zones or even three sitting on top of each other. And the nice thing is, look at how it's just below all of this trading activity here. This has happened to us many times over the past years where gold is just ranging and ranging and ranging. And right below, there's a key demand level sitting there. So we just wait for a price to go below that. Now, there are other small time frame levels. It's not like we have to wait weeks or days for a trade. But I just wanted to point that chart to you. Okay? Again, all we're doing is identifying where banks, financial institutions, the professionals are buying and selling in the markets, so we can buy and sell there also. Does that make sense? And I know, again, last time we in the last two times we kind of made the sessions more lesson based. I wanted to get into the markets today. All right, let's go to so I want to look at the euro. There's not much to look at in the euro at the moment, but let's take a look. While that chart's coming up, is let's see. Aiden, yeah, you could. I think you're saying you're getting close to supply. I think you're saying you're getting close to supply in that market, but you still have 100 pips till you get there. I think you're saying, would you buy a pullback to a demand zone, even though you only have 100 pips left? I think that's kind of what you're saying. You could on a smaller time frame. For me, I would make sure that my profit target is well before that supply zone. So if it's really 100 pips to the supply zone, you may want to make your profit target like 70 pips. 70 pips. Does that make sense? Or 30 pips before the level. All right. So for those of you who've been with us all year, as you know, we've been very bearish the euro, very bullish the dollar, only because the chart told us that, not because of any news we were focused on. Right? So here's the euro. All it's done all year is trade from supply down to demand, and actually developed a new zone here that's already been hit. So, there's not a whole lot to do here in the euro, at least in the bigger time frames. When we come down to the smaller time frames, do have some levels here. That one's too far. Just a second. I don't have my guide with me here. That one's too far too. yeah, there's not a whole lot to look at here in the euro. We haven't really done much in the euro lately, just because it's in the bigger picture, it's doing exactly what we thought it was going to do. The Aussie dollar, the Swiss, those have bigger opportunities. Okay, let's go right here. Yeah, so the strategy, right, is we use the strategy equally across any market, any time frame, and for any financial purpose, right? It's one rule-based strategy, any market, any financial purpose, meaning daily income, weekly income, building, protecting that longer-term wealth, any market, stocks, futures, forex, options, bonds, crypto, real estate, it doesn't matter. It's all supply and demand, right? All right. But having said all that, let me do this here. There is like I said earlier, we have to cut the session a little bit short today, but hopefully it was impactful and helpful. And if not, there's my email address, sam.seiden@tradingacademy.com. You can always send me an email, and I will do my best to help. Okay. All right. All right. Have a great day, everybody, and you can watch those opportunities we went over. And again, if you have any questions, just let me know, and we'll see you. We'll see you very soon. Another FX Street session. Thanks.